Okay, but the attention seems to still be generally hogged up by Nvidia. Maybe that'll shift with Apple at the records, Jeff, but right now the commentary is busy on the semiconductors.
Yeah, I think the focus continues to be on the semiconductors, on NVIDIA in particular. And, we're continuing to see analysts weigh in post the split here. Argus raised the firm's price target to 150 from 110, kept a buy rating on the shares. They said following a highly successful 2024, NVIDIA is positioned for continued momentum in 2025, and shares have much further to go. The firm also says that they're looking for growth beyond data center and AI as the company's other end markets, including the gaming, professional visualization, and automotive, also accelerate. We also saw a note out of Oppenheimer, who reiterated an outperform, moved them to $150 for 110, said that they see NVIDIA as the best positioned in AI, benefiting from their full stack of AI hardware, networking, and software solutions. The analysts also raised their 2024 full-year earnings estimates to $2.62 and their 2025 estimates to $3.32 following the split. They said that they see several structural tailwinds driving the sustained outsized top-line growth in high-performing gaming, data center AI, and autonomous driving. So obviously we've watched the stock hit the market cap $3 trillion. We saw that last earnings report where revenue was up 262%. Data center revenue, grew 427%, coming in at 86% of their total revenue. And even gaming was on the rise, up 18%. So the numbers have come in really well for NVIDIA. They continue to do so. And analysts, investors alike continue to seem pretty optimistic about this AI boom.
Even with the ferocious run of Nvidia stock, analysts continue to express support for the chip giant. The company's latest strong endorsement comes from Evercore ISI, which raised its price target to $145, implying more than 20% upside. And that's not even everything, because ultimately, Evercore believes that Nvidia stock may end up representing 15% of the S&P 500. That's an extremely ambitious goal, considering that right now, the second and third largest companies in the US account for 13% of the index's total market capitalization. But it's quite possible that the 10-for-1 split of Nvidia stock could spark even more upside for the AI titan. So let's get right into Evercore's newest Nvidia note and talk about why the investment banking firm is so bullish on the company. But before we get into today's video, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
As we just heard from our guest earlier this morning, Robert Cantwell, looking at Oracle this afternoon to get an update on another hyperscaler competitor, to see how much they're buying. Says if there's a big CapEx number there, it could be good for NVIDIA. I thought that was pretty interesting. I think that's probably fair and true. They're trying to buy the dip a little bit here. It wasn't much of a dip this morning, NVIDIA, but anytime there is anything, it usually gets scooped up like it did yesterday. So price target's moving higher. Don't imagine that's going to scare anybody off. AMD still down though, Jeff. You think that's because people don't need it as a cheaper proxy anymore? Or is that just because no one's showing AMD as much love on the analyst side?
I think it's a little bit of both. I think it's there isn't as much love being shown to AMD. I mean, NVIDIA is clearly a market leader here, especially on the AI side, controlling, roughly 90% of that market. And the fact is, NVIDIA's second largest market platform, which accounts for about 10% of their revenue, is gaming, right? And the company, expectations are fairly high. We heard from the analysts, but also from others that, the graphic cards for computer gaming are going to continue to rise. We've heard a lot about PCs. Kind of coming back in the second half of the year and beyond. I think that the gaming side could certainly add more revenue, and that's an area where they're going to be competing with, companies like AMD. And now challenges are certainly that AMD and Intel and other names are, growing competition. There's also some issues in China. There's these high expectations around AI chips. Those are all, potential challenges for a company like NVIDIA. But at the same time, when you've got their data center growing, 200+% year over year in these quarters, and the supply continues to remain kind of constrained, I think that's a real positive. And, the fact is their H100 chips, they almost can't, they're selling so many and they can't make enough for what everyone wants. Now they've got the Blackwell chips coming out, which I think investors are pretty excited to see what sort of numbers we're going to see come out of those.
According to Evercore strategist Julian Emanuel, the history of other marquee tech stock splits has been rally first, then sell-off and volatility after the split. Such volatility resets the generational buying opportunity time after time. He cited other companies that benefited from technological revolutions like Amazon, saying that it's possible for the Nvidia stock split to coral more bullish enthusiasm, and not just because of the enhanced access among retail investors. Rather, Nvidia, like Amazon, may fundamentally change the way business is run in its core industry. Additionally, analyst Mark Lipacis, who moved from Jefferies to Evercore, just made a big splash for the new employer with his take on Nvidia stock. He said that history suggests that Nvidia could become 10 to 15% of the S&P 500. The analyst said that he has observed that at each successive computing era, the ecosystem players represent a larger weighting of the S&P 500. That's high praise for Nvidia stock, and it's not without merit. In fact, according to CNBC, following its more than 200% surge in the past 52 weeks, the company's present weighting in the benchmark index has expanded to 6.6%, citing FactSet data. Still, it must be said that Nvidia has tough competition as it seeks to achieve this goal, and this is because Microsoft holds a 7% weighting and Apple holds 6.4%. Ultimately, Lipacis remains bullish on Nvidia stock, telling clients to continue buying more Nvidia shares ahead of this anticipated weighting expansion. Given this projection, the argument is that Nvidia stock is actually undervalued, and this is why Evercore thinks it's a buy. This may be a tough pill to swallow for some investors, but we should keep in mind that part of the bullish argument is that several years ago, Nvidia focused on the gaming industry, and total sales of that sector grew from $7.98 billion in 2000 to $19.7 billion in 2009, translating to a compound annual growth rate of around 10%. Today, the focus is on AI, and this sector could generate revenue of over $1.81 trillion by 2030, translating to a compound annual growth rate of 36.6%. Therefore, it's very possible that Nvidia will continue to dominate AI just like it dominated gaming, and this will benefit the company more since AI is a much larger market. With all of this in mind, we can say that despite trading at a cheaper price after its split, Nvidia stock is still priceless, so let's talk about the company's amazing fundamentals that should have investors buying this stock head over fist. Hello everyone, and welcome back to Investocracy.
That's good. Yeah, I saw your bold tie. I mean, that means you think there are paths to be made, strategies to put in place. If you feel bullish at this point, tell me about what are some of the catalysts. Why are you bullish on 2024?
I think the primary reason that we're bullish is that when you look at the big companies that everyone's talking about, the big seven and how they're doing, they're just killing expectations, beating earnings, doing all that stuff. But everyone's worried about valuation. But valuation, if you looked at it 6 months ago, 1 year ago, 3 years ago, it looks actually relatively cheap right now. So if you think about it, over the last 3 years, those stocks have increased operating earnings $150 billion. Their cash has increased from, on a combined basis, from $150 billion, $50 billion more to $200 billion. They have cash on the balance sheet and they have an increased debt. So if we took free cash flow, they'd be able to pay down their debt within 1 year. That doesn't seem to me a place where we're worried about big drawdowns or extended drawdowns. It's a good place to be, and yes, they're obviously, based on valuations, we can see the very normal 5 to 10% pullbacks, though.
In my opinion, Nvidia stock is an attractive investment for the long term, based on the company's undeniable AI leadership and exponential AI growth potential. On May 22nd, the company reported yet another blowout Q1 results, driven by robust continued computing and accelerated generative AI demand momentum. Nvidia's adjusted earnings of $6.12 per share easily beat the consensus estimate of $5.60 per share. Also, the figure came in 461% higher than the fiscal Q1 2024 figure of $1.09 per share. Impressively, Q1 revenue jumped 262% year-over-year to $26.04 billion, surpassing the consensus estimate of $24.59 billion. On top of that, its adjusted gross margin expanded 13.8 percentage points to an unbelievably new high at 78.4% from 64.6% a year ago. Finally, Nvidia's crown jewel segment, data center revenues, soared 427% year-over-year to $22.6 billion. The segment makes up 86% of the firm's total revenue. Looking ahead, the Q2 guidance appears promising, with revenues expected to be around $28 billion, ahead of expectations. But despite this, adjusted gross margins are forecast to be around 75.5% versus 77% projected for Q1 3 months ago. Nonetheless, it still remains far ahead of chipmakers like AMD and Intel, with gross profit margins of 50.6% and 41.5%, respectively, in the past year. This demonstrates Nvidia's ability to continue to beat earnings expectations while being ahead of the competition at the same time, and all of this is positive for Nvidia stock. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Looks like we're going to have a slightly muted opening to this new trading week. The Dow, the S&P and the Nasdaq all down about 1/10 or 2. Keith Fitzgerald joins us now. Great to see you, Keith. Nvidia's 10-for-1 stock split takes effect at the opening bell. You say there's still plenty of upside from here. How high do you see it going after the split? I mean, a lot more people can get into this now, conceivably, that it's 1/10, a hell of a lot cheaper than it was.
Well, I love this business because that's absolutely true. It means the psychology has changed, the accessibility has changed, and the price has changed. This is a company that's growing at 250, 60, 70% a year. Earnings are up 450%, could track much higher than that. Companies, the biggest customers, are buying every chip that company makes for the foreseeable future, and they're already rolling out improvements. Blackwell and Rubin.
Another reason why investors should stay bullish on Nvidia is because the company continues to innovate in the AI space, which will help it maintain its position as the global market leader. Nvidia's latest GPUs and CPUs, backed by both its hardware and software capabilities, remain top of the line in the AI industry. As the preferred choice in high computing data centers worldwide, Nvidia commands superior pricing power. In addition to that, the scope and expansion of AI continue to grow manifold, and the demand clearly continues to outpace supply. In fact, Nvidia's CEO, Jensen Huang, said during the company's Q1 earnings call that beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. Also, at the Computex event in Taiwan, Jensen showcased Nvidia's latest AI architecture, Rubin, which is expected to begin shipping in 2026, less than 3 months after the announcement of the company's Blackwell platform. Blackwell, designed for high-performance AI and scientific computing, succeeded the Hopper platform, which was optimized for AI inference and training and launched less than a year ago. Blackwell is now in full production and expected to ramp up in Q3. Meanwhile, Hopper continues to see strong demand. What's better is that Jensen said that Nvidia will launch a new line of chips every year, compared to its initial plan of releasing new chips every 2 years. This accelerated pace of innovation has allowed Nvidia to retain a 70% to 95% market share in the AI chip market, according to estimates from Mizuho. And even though competition in the AI space is heating up, with competitors like AMD and Intel launching their own new AI chips at lower price, Nvidia's first-mover advantage in AI technology keeps AMD and Intel several quarters behind. Nvidia has climbed to become the second most valuable stock in the world, with a market cap of $3 trillion, an unbelievable leap from just under $100 billion less than 5 years ago. And the company continues to enjoy a sizable market share in the AI industry, which will continue to grow by leaps and bounds in the coming years. So we will continue to buy Nvidia stock at current levels, while some critics warn of waning demand after the initial wave of AI installations. We believe that this is at least several quarters away. Therefore, Nvidia stock remains a strong buy. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for NVDA is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.